Hi guys. So are you struggling with market structure and overall market direction? Okay. So today we are going to run over a quick way how to determine market structure. Okay. So this is the method I use, and hopefully it could help you or someone else um, have a clearer understanding of market structure and liquidity because we'll be dealing with both of those subjects. Okay, so as we can see here, if we dive straight into it, that the market has been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, so if we look at this example here, okay, one thing that I should say is that liquidity rests above old highs and below old lows. Okay, so because market structure was not shifted bearish during this pullback, the liquidity above this high was then attacked because the overall market structure, even though we had three bearish months here, the overall market structure was still bullish. Okay, so same as this. Okay, we had a pullback because the market attacked internal range liquidity, okay, and then the liquidity that was resting above here was ran, okay. So same as this. If you look at the market this way, it's a very easy way to determine the market direction because if we have a um, market structure shift on the monthly, the other time frames would then follow, the weekly and the daily, etc. So, as I said, liquidity rests above old highs and below old lows. Okay, so because this low was the last low during this move up, the most recent low before this move to the upside, this is then a higher low, meaning it's a swing low. If that swing low was broken by this candle here, if it was broken, and then we would have a market structure shift, and then price would then be bearish. Okay, but because we did not break this low, price remained bullish. Okay, so a quick and easy way to understand this is that if the market is making higher highs, higher lows, higher highs, higher lows, higher highs, this low should not be broken. Okay, should not be ran through. And then what you have to see in your mind is that liquidity above here would then be targeted because as the same pullback here, this liquidity was targeted. The same liquidity here after this pullback here was targeted. So then that's all you do all the way up. So you do not change your bias. You just adapt with what the market is showing you on this higher time frame. Okay? So with that being said, remember I said that price moves from external to internal liquidity. Okay? So because this low was not taken out here, this down close candle is used as liquidity because smart money uses these down close candles as bookmarks. Price would then go back down into them and grab some more orders and then head up towards where the liquidity is resting. Okay, so as we can see here, price made a higher high, higher low, higher high. We did not break this structure here, so we respected this bullish order block, this down close candle. We respected it. Price came down. Okay, never touched it there. Uh, August price came down because look at this. Open, low, high, close. Okay, so we look at the power of three, but that's for a different topic. We will handle that at a different time. But just to show, just to give you an illustration that how price respected this order block is that you don't look at the wicks. Wicks do the damage, but the bodies tell the story. Okay, so the body didn't even, it closed way above this order block. Okay, so then September, what did it do also? Open, low, high, close. Okay, so then it tested this order block one more time and then it took off. Okay, so on the lower time frame, this is all, these are all trades in here, but you should not be swayed to change your your bias until this gets taken out, and then you can then look at the market being overall bearish. Okay, so with that being said, what I saw was before these candles were even uh, these two candles were here, I looked at August and I saw, okay, August is respecting this bullish order block and it's not taking out April's low, so price is then still bullish. But because we are in this range here, we had to wait for more uh, details, for more data. Okay, so then here we can see September closed above August. Okay, which is a positive sign for me. Okay, so after September respected this order block and closed above August, that was a good sign for me to say that, okay, we are still bullish. All right. So then we drop down to the weekly time frame. Okay. So here we can see higher high, higher low, higher high, higher low, higher high, higher low. Okay. So these are all those swings that we saw on the monthly chart. These are now transposed to the weekly, and we see how the market then pulls back, expands, pulls back, expands, pulls back, expands. So that's a quick and easy way to see how the market then changes its direction, and then you can still be on the right side of the market overall. For those who are position traders or swing traders or so on, you guys can still see that you are still safe in looking at liquidity above this level here. Okay, so we drop down to the daily because that's where most of us um, trade. We trade on the daily. But just to show you here that September closed above August, okay, right there. And so that was a indication that we would be going higher, okay. And then price also respected this weekly busy over here. So then what did I say about um, liquidity? Liquidity rests above old highs and below old lows, okay. So seeing that price is bullish, we can see there's a bullish trend in here. So the liquidity would then be resting above this high, this previous month and previous week high. Okay, but we'll just call it the previous month high. Okay, so liquidity is resting above that, and that is going to be a target number one, and eventually we will be heading for this liquidity above this. Okay, so dropping down to the daily. Okay, the daily has started to become one of my favorite um, time frames because it gives you such a clear indication of what price is doing. Okay, so we can see here that, okay, this was before this move lower, we had a lower time frame market structure shift here, which then we broke structure on a lower time frame. Okay, but then liquidity was resting below this low. We had a pullback, we took out that liquidity, and so forth and so forth. Okay, but to get into the recent price, um, we can see, okay, where did we start? We had this uh, bullish market structure shift here, okay, because we had that displacement, we ran this high here, so then price became bullish. Okay, so then we went, um, liquidity was stored above this, we came internal, and then we ran it. Okay, liquidity was stored above this high here, we consolidated, and we ran it. Okay, now liquidity is resting above this high here, which we are possibly going to take out today. um, we had this pullback here. Okay, so as you can see, another example of a lower time frame market structure shift, and then price pull back down here. Remember, we had that weekly pussy that I showed you guys here. Price respected the weekly pussy. Okay, then we had this bit of a consolidation here in this this candles range. We had the consolidation, and then we had a up move. We had that took out Thursday's high on a lower time frame. So that was a change of character, a market structure shift, and then we price created this down close candle here, which is then now a bullish order block that price came back down into. Okay, respected beautifully. Um, didn't it closed above the mean threshold of this order block. So then on Tuesday, the market opened, trade lower, respecting this order block. Okay, as you can see here, the open was above the mean threshold. So the wicks did the damage, but the body told the story. So that we attacked all of the liquidity above these highs here. Okay, so remember what I said, that liquidity is parked above this, it's stored above this high here. So price is making steady moves higher and higher. So during the news today at 8:30, uh, price would surely then manipulate lower and then take out this higher. I'm not sure exactly how far up we'll go, but that is my um, what I think price would do. It's not definite, it's most likely to do that because look at this. We have these equal highs here. This high is lower than this one, so that means that price is likely to run this level here. Okay, so now we can see, we can go down on a 4-hour chart, which makes things a little more clearer because we can see that every day uh, price then takes out a high. See, Tuesday's high was taken on Wednesday. Wednesday's high was taken yesterday on Thursday, and Thursday's high would then likely be taken today as well as this Alta here. Okay, so our job is only to get in line with the market direction. So you need to figure out how you are going to get in line with um, the the daily chart, um, because as we can see here, let me show you a nice example of where uh, price that you can see on the 4 hour, how it attacks the old lows in a downtrend. See here we had this market structure shift. Liquidity was installed below this because that was, we broke this, so then we became bearish. So then that means that liquidity was stored below this, and then we had this pullback, and then we took out the liquidity that was stored below this. So meaning we are still bearish. So the liquidity was installed below this. We had this pullback, took this out, had another, so liquidity was stored below this, another pullback, and then no market structure shift to the upside. We remained bearish, and then we took out the liquidity, as you can see, and so forth and so forth. We had this um, gyration in here, but then took out the liquidity below that. So that is basically, in a nutshell, how market structure and liquidity works. Okay, so I hope that this helped someone have a clearer understanding of market structure and liquidity. Um, if there are any questions, please leave a comment down below. Um, don't forget to like and subscribe to this channel. Um, your likes will help this channel grow. So yes, please do share, um, like and subscribe. Don't be afraid to comment. There's no wrong answers or wrong questions. So please feel free. Um, yeah, I will be um, seeing to more um, of these kind of videos in the future, just to show you guys um, tips and tricks that I know that I've learned on my journey. So yeah, until the next video, guys. See you.